got lower rates. You got lower rates, and you got and he told you how good the economy was. So if I'm an equity investor, okay, hey, thanks. Whether I agree with it or not, I did think that the initial response was right because as I wrote last night, we talked about yesterday. So when you guys proceeded to push me along that track to think about that without a unanimous decision, this was this situation, I'm not going to call it a statement, this situation was more hawkish in that regard. And I think the metals and a few other things had it absolutely right. The equity markets went along for the ride, and then they turned and flipped as I really thought that they should have. That did not surprise me. So I thought the markets actually acted fairly sensibly. The metals will have to find their own footing here to see, how they really absorb this. The dollar, same way. But there was no surprise. Although, had Richard Claridge's views prevailed, I think you would have gotten a unanimous decision, but you didn't. And Bullard, whatever credibility he's had, which I think is low anyway, is totally gone for any thinking person. So that's all. That's all I can say about that. Is wow. That's all you got. You went for 50. What is he trying to carve out a seat in the Trump administration? That's kind of when I looked at that, I go, well, why would you do that? But whatever, that's what he did, and so be it.
So I was looking at some of these European bank futures.
Oh yeah, that's a good.
And the one with the ESBZ, I think that was the one you were originally looking at. I mean, that's
hold on.
Yeah, I think that thing traded almost 2 million contracts today.
Really?
Yeah.
Okay, so
I was in shock, and then because I was going through them a little while ago, and the other one, the European bank, the 600, it's got a little bit better setup. And then what was the other one I was looking at? Gosh, there was another one. Oh yeah, the FED VZ19. This is the dividend 30.
Mm-hmm.
This had monster volume.
So we should get some follow through then on the currency if that's right. It's hard to say that this. I mean, with everything as an objective listener, and you go, well, if everything is as you say it is, why would you bother to cut anyway? Was it? And that's the question that I would pose in a very direct fashion, which is, are you so afraid of the markets and disappointing them that you had to cut? But really, from all the data points and everything else you've seen, that there was really no reason to cut? And that's, exactly how I would ask the question, because that's what my trader instinct says I have to know. Because if that's the case, the market's going to trap you at all times. And if you're going to only react because, again, the famous failure of the Bernanke taper tantrum, which I think was a disaster. I thought in real time, I continue to think it plagues all the markets. I think that's responsible for Draghi's, because he did minimis because he didn't want to disappoint the market. And what a terrible way to run monetary policy, but such is the world we live in. But the question should be posed that directly. Are you that terrified of disappointing the markets?
Yeah. Did you see that article in the Wall Street Journal? I put that headline in this morning.
Which one?
It said ECB's new approach is to pay banks to lend. Who wrote this thing? This was in it was in Banking and Finance. I think it was who is it? James, maybe McIntosh or something might be the.
Oh, was it James McIntosh? Yeah,
that's
I know him. Oh, yeah, I did read that. Yeah, that's well. Listen, that's Europe, because when you look at Teltro, that's what Teltro is: targeted long-term repo operations. So you're basically locking them in at these ridiculous rates for a long period of time, rather than typically repo you think on an overnight or a week or maybe a month, but targeted long-term repo operations. So yeah, here's the money. We're giving it to you at negative interest rates. Go have a party. And that's the situation in which we reside in. So I thought Powell was his best press conference, because he was very cognizant of being laid away, and it was a tough one because, of course, the repo facilitation this week and all that it's meant, and you knew he was going to be hammered with that. But the bottom line is, and now I guess they've announced that they're doing another one tomorrow, so they're still concerned. But the bottom line is, they don't understand this. They're trying to understand it, but it's an awfully big bet, and that's always been my theme, is you've made a gigantic bet on something that you don't really know. And that's why the question always is, what's your exit strategy? And that's for all the central banks. That's just not the Fed. What's your exit strategy? How do you get out of this? And the fact of the matter is, nobody knows. So where the dollar and currencies used to be dependent upon the full faith and credit of the government, now the institution that defends that is dependent upon the full faith and credit of investors. Everything's been turned topsy-turvy, as we talk about. People now buy bonds for capital appreciation, and they buy equities and they buy equities for income. So you're buying bonds for capital gains and equities for income. Totally the inverse of the world. We used to buy stocks for capital gains and bonds for income. Everything is stood on its head.
Well, Ira, back in 1981, Gary Schilling said he started buying 30-year zeros for capital appreciation.
Well, you know what? Yeah, but you got
and he rolled them every year.
Yeah, but you got capital appreciation, but you were buying them, for income, especially. Because stocks, I would argue that as good as the bond rally has been, if you were buying stocks for capital appreciation in the same time, you'd be far ahead of the game. So, yes, Gary Schilling's point, I certainly understand. But let me tell you this. I would rather own Microsoft at $1 than I would a U.S. Treasury. Yes, I'd love to own both of them. But, yes, if I was smart enough to buy a 30-year with a 15% coupon, good on me. But I would have done very well buying equities. Not all equities. Because U.S. Steel, no. General Motors, no. But if I was smart enough to buy, of course, the right equities, yeah, you would have done very well. And Microsoft, I think, I don't know when it actually became public. 82 or 83. I could be wrong. It might be a little later than that, but it was certainly in the 80s. So, yeah, it's a nice comment to make. But and best of all I did was have to buy Berkshire Hathaway every day. Buy one share back then. I don't know what it was trading for, but you could look it up. If you would have bought it then, how would you have done? Let's see. I can tell you.
I'm pulling it up right now.
Okay, what was Berkshire?
I was just going to mention two things on the Fed, Ira. I read something very early this morning that seemed to allude to the fact that this repo thing would have been under the purview of Simon Potter.
Correct.
right? And he's not there anymore. And I was in and out during Powell's remarks, but I don't think I heard anybody ask him about the 5 basis point cut in interest on overnight reserves.
They didn't, and so of course it's a full 30 basis point cut, which I wondered whether or not that should have a negative impact on U.S. bank stocks. Because don't forget, as we've discussed last year, I think they got banks who deposit large amounts at the Fed collected $53 billion in interest payments last year on the interest on excess reserves. So there's a hit here, and I just posed that question to somebody. To Peter Bookfarm. I just sent him a note. I'm waiting for his response because I thought that that should be
negative for banks, right? Or the financials?
For banks, and yet the banks performed very well during and after the Powell Fed. They rallied.
They rallied into the close.
They led,
yeah. Even that piece of garbage Citigroup was up.
Right. Well,
so I thought to myself, okay, less interest income, a little bit of a liquidity crunch, right? Trading revenue, just across the board, and it's not what I would have expected either. Because I was looking for exactly what you were looking for.
Ira, you wouldn't have been able to afford Berkshire Ag with your gold money. It opened at $3.50.
Where was it traded in 1980?
And
it went what year?
In 1980, in July, it opened up at $3.50. It's trading at $317,000 a share.
Well, that sounds like the winner to me.
Yeah.
Let's see. What percent is that? I can pull that up.
What about the Swiss National Bank? It's still paying a 0.25% dividend. So you get central bank, you get bonds, and you get an interest rate. And they may split it. They may privatize it. While we're looking at Berkshire Hathaway.
Oh, yeah. It's just crazy.
Chart porn. That's chart porn.
I thought I'd be able to go back to 85, but these idiots only have it back to 1990.
Ira, do you see insurance companies making money in such low interest rate environment?
They've been raising premiums.
They're going to have to. I mean, I mean, I don't know how you could. I mean, you can't plan 10 to 20 years in the future.
I think Ira got dropped.
Seems like it.
Oh, let's see if he comes back in.
There's a.
What? Hold on. What's my meeting ID? God.
Hello.
Yeah, you there?
Hello.
Okay.
Yeah, I am.
Yeah, okay.
I had it. It took me a minute to find it. So where were we? About Berkshire. So where was Berkshire in 1980? It
opened at $3.50.
Yeah.
And it's trading at 317,000 and change.
Yeah, you know what? So I would say back to A. Gary Shilling. And that's as simple as it gets. So I could have bought Berkshire Hathaway, and I would have far outstripped his 15% and his capital gain. So again, yes, I would have loved to have had to be clipping 15% coupons, but I may not have gotten the coupons with Berkshire. But if I would have taken my SEP account or my IRA,
it was just an interesting trade that he said he had on, until recently, since 81. And just,
well, it's a 30-year. They expired in 2011. I know. Let me tell you this. Jim Sinclair did this in 1981 or 82, bought a lot of zeros as he got out of gold, and I thought it was a brilliant trade. I wasn't smart enough to make it, but
I mean, what he said he did, because I've been reading his stuff since 2004. But what he said he
really
did was just each year. You know, he didn't hold it for 30 years. Each year he re-upped, maintained the 30-year duration.
Oh, okay, yeah, and it was a brilliant trade. Listen, it's what made Bill Gross's career. You know, it's what, because he was doing that on a massive scale for pension funds and, you know, others. It's what built PIMCO. And Bill Gross wrote a piece more than a few years ago. So he was still at PIMCO when he wrote it. And maybe he was just lucky and he wrote that piece, and I respected him for writing that piece. And maybe he was just lucky and was riding the greatest bond wave in history, you know.
I mean, Gary was like, hey, look, let's be clear. He goes, you know, there were times where I was second guessing myself. You know, nothing is freaking easy.
You want to talk about a bond trade? McLennan had it on, and Dittmer was the one who bought the 30 years at 60.
Yeah.
And Steve we were all along, and he did one of his walks down Jackson Street where he started ripping phones out of the receivers, and he bailed out, and the bonds rallied like 20 points straight up. We all got
I'll tell you.
Straight up.
Yeah. I'll tell you who else was brilliant on calling that was Vipul Shah. Vipul is really a great bond guy. Very bright. Very bright. I didn't understand enough at the time. I was in the process of learning, and I listened to some people who were blithering idiots who, you know, talking about the total demise of the, you know, taught me a lot how to trust, you know, how to listen to people, but ultimately at the end, trust my own judgment.
Steve I don't know what he didn't like. He was taking a walk, and in a week, that trade was worth like $1 million to everybody in the office. We all got out. Yeah,
he was, still one of the best thinkers I know.
Oh, yeah. He never responded.
So, Ira, where do you think we go from here?
I'm sorry?
Where do you think we go from here?
In what? What are we talking about?
I mean, you know, it's Fed Day. We got our quarter-point rate cut. You know, I mean, just from a global macro point of view, you know, where do you think things start to play out from here? Anything in Europe or China or U.S. data?
I think Judd's point is, you know, about waiting, because October, we seem to find things out in October. You know, it's like what's hiding under the rug? What am I going to trip over? Last year, I thought it was much more easy to see. I think right now the world is very the world's always complex, but sometimes it's more complex than other times. And again, I'll go back to what happened over the weekend. How come we don't know anything about this? You know, we talked about it yesterday. We know very little about this. Very little. In fact, I had breakfast at the corner bakery this morning. I was waiting for you to pop in. It was really, he says, you know, a lot of people are skeptical that we don't know. How do we not know more? What exactly is going on here? I'm glad that Trump has, if you listen to him today, he was very conciliatory. For him, the ramp of the rhetoric has been very contained, which is a good thing, because this is no time to go ramping up rhetoric and pushing buttons, you know, further along here. The world is in a very...
Ira, you know, he said something today that I heard right before the Iraq war. I was like shocked. He said word for word what I heard. He says it's easy to attack, but what's the aftermath? What's the end game? And Dennis Ross came to my hometown, and he said the same thing. So he didn't like Bush at the time, but he said, yeah, it's easy to go into Iraq, but he says you don't know what's going to happen after we declare victory. Right. So I I was really, really shocked by him saying that. So I'm telling you, I think his advisor is Dennis Ross.
I'm sorry. You went out on the last one. What did you say?
I said I wouldn't be surprised to see Dennis Ross pop up. I'm telling you, that is word for word what Dennis Ross said, 15 years ago.
Interesting, because I'm not a Dennis Ross fan. Although he is better today, but he was one of those guys whose policy was wrong, and they didn't get. And what bothered me is, like, at some point you got to change directions. You can't be married to a policy that doesn't generate any positive results. You just can't. And I think that the Dennis Ross, Martin Indyke, and these people, that's my problem with them, is that they kept pursuing the same policy even though it failed to produce results. And they said, well, it didn't. Their response would be are you guys hearing me?
Yeah.
Yes. Okay. Their response would be the same counterfactual that you get from Ben Bernanke, the master of counterfactuals. Well, if we didn't do this, and I don't know that. And their counterfactual would be, well, at least there wasn't more war. But that's not, to me, that's not an adequate answer. Change streams. Evidently something was wrong. But if Dennis Ross said that, which I don't doubt, and some of the things that I've read of him over the last 3 or 4 years, I had much more respect for it, because he was very critical of the Obama Mideast policy, which I thought there was a lot to be critical about, especially when it came to allowing Russia back in. I just, for the life of me, I never understood that. I think it was a major failing. And it's responsible, I think, for a lot of what we have now, because, listen, Putin is, as we talked, and I believe he's a brilliant tactician and strategist, but he's a disruptor by nature, because disruption works to his advantage. So, I think we're paying a price, and I'm not sure that something in the Saudi deal is not going to come back to Russia. I'm not kidding, because I'm still sitting here going, you got to do better than this. What do you got? You came out with all this bluster about you knew this. Well, now it's 4 or 5 days, hence, and we don't know anything. But I'm glad that they've toned it down. And if Dennis Ross said that, good, I applaud him immensely. So, and you make a good point. Will Trump reach out to him? That would be very interesting, because he'd be resurrecting somebody who had kind of been sent to the woods. So that'd be interesting. So it's a good point.
Hey, Ira, this is Brian. Yesterday, you got me thinking of a book that I had read right before I deployed to Iraq back in 2004. And it was one of our mandatory readings for our detachment. And that's A Peace to End All Peace by David Fromkin.
Yeah, I've read it. Yeah, I like it.
Yeah. And I think a lot of that still, I see what they did back, at the end of World War I, and how they literally cast the die for, generations to come. And when you were speaking of that, that kind of, I went back and resonated with that. So I wanted to thank you for that.
Yeah. And I'll tell you who else wrote a really great book. And at times I agree with him. I think he is the best historian right now. And I believe me, my son would whack me in the head with a 2x4. But I think Neil Ferguson has written some really good stuff on the Versailles peace conference, and always worth paying attention. And listen, let me tell you that, Brian, I applaud you for your service, because it took a lot.
Ira, you're fading again. I think we just, no, he's there, still there.
That's important, and I'm glad that they educate you guys when you deploy, because there's a lot of stuff to know over there. It's never as simple as as we want to believe that it is. So number one, I salute you for your service, and I salute you more that you went over there and you've educated yourself about what you're facing, because this is all the.
Ira, we're losing you again.
Hold on. How about now? Is that better? Oh, okay. So yeah, you know what? When you deployed over there, and you're still cleaning up the mess from 1919, and most people don't understand that. They just don't understand that everything that we're dealing with is the end result of that, and the way it was pieced together, and the fact that everybody who still wanted to have influence and impact, you know, the Brits with the oil in Saudi Arabia, Iraq, you know, they knew what was there, the geological studies, and everybody had to have their input. But it resulted in a really lot of bad. Listen, we supported a lot of bad actors because they were anti-Soviet, as most Islamic rulers would tend to be, because the whole Soviet concept was anti-religion. If you look at the Soviet Union as an empire, they crushed religions from Judaism to Christianity to Islam. They crushed them. You know, there was no room for it in the people's Soviets. You know, no room for. So I mean, so that forced us to support a lot of really bad actors, as you know, Chalmers Johnson would say, we're suffering the blowback, and to a certain extent, it is true. We're suffering blowback from a lot of years of bad policy. But I thank you for those comments, and it is, you know, but again, it's the purpose of this. It's the concept of seeking to enlighten in places where I think people need to see other sides, and unfortunately, the narrative and dialogue that takes place where most people will find things, this isn't discussed. So, Brian, it's a very good point, and really, that's a very good book. As what's her name's book too, about Versailles. I can't think of her name right now, but she wrote some great stuff. I'm looking at my bookshelf to see if it's here or whether it's in Arizona, but no. But I would recommend Neil Ferguson's book too on Versailles and the Treaty of 1919, which was so important for understanding where we are in the world.
Is that A Pity of War?
Which one?
A Pity of War. I'm Googling right now so that I can get it ordered.
No, keep going. I'll tell you what it is. Maybe the piece. Keep going.
Let's see.
I'm looking for it on my shelf, but it may be in Arizona and not here.
Is it the War of the World? No. 20th Century Conflicts?
No, that's also good, but that's not the one. Oh, Ferguson. Let's see if it's over on this shelf. The piece to NLP, is it? I'm not seeing
That's
it. That's
Fromkin. Yeah. Well, here, let's just do Versailles. Sorry for
Ferguson.
monopolizing. Unforgiven, Unrepentant.
No, let's see. Let me see. I'm going to Google it too. Let me Google Neil Ferguson.
Yeah, you know, Ira, I just started reading Rick Atkinson's book, The British Are Coming.
Oh, and I found Margaret Macmillan's book, Paris 1919.
Yeah, Margaret. Yeah, that's a great book too. A great book. No, it's not right. Let's see. Come on. Not civilization, not the ascent of money. Shoot. God, let me see. Come on.
I was thinking it was the pity of war, but if
no, it wasn't. I know that's what keeps coming up here too, but it was. Let's see.
Well, when you guys figure it out, I will.
Sorry, Judd.
I will post it. Okay.
Okay.
All right.
I'll get to it. It's,
consequences of the peace. Would that be it?
that's the one.
Yeah, he said Keynes' homosexuality affected his perspective of the Versailles Treaty. That's what it. This is what I Googled. This is what it said here. So
yeah, when Ferguson talks about the consequences of the peace, it was very important, and he starts out at the beginning of the book, which really, because most historians don't talk about this, and he was talking about the bond markets, and as traders, this is very important, because he talked about, because it amazed him. It amazed him. The economic consequences. That's Keynes is the economic consequences of the peace, which is really good. But Ferguson, what's that book?
I don't know.
I read it. Read it when it first came out. But he talks about something right at the beginning, which was quite interesting. And because I was reading it and thinking about stock markets and the way they're slow to react, and the bonds, the European bond markets, kept rallying, thinking that the war was going to be a short war, and people who owned them got of course destroyed. But Ferguson was making the point that sometimes we're just slow to adjust to things, that we so want to believe in what the popular narrative is that we keep on going. And it was really a game changer for me. It was not a game changer. I mean, it made perfect sense. But the fact that he had done all this work on analyzing it, and when I actually met him when what's his name, Steve Drobny had a book launch party. Now here, all these books are coming up now. Why don't I see it? He had a book launch party, and Neil Ferguson was there, because I think Neil Ferguson wrote a piece for the book Inside the House of Money. So I had at the book launch, I was there, and we actually talked about it. I talked about how impressed I was with his work, and he was very okay. Neil Ferguson. Okay, I'm going to books. Okay, let's see what comes up here. All his books. Neil Ferguson.
He's great at interviews. He's very passionate.
Oh yeah. He is. He's really good. I mean, he writes about money, understands money. Is it the pity of war? Can I really be that far off? I didn't think that was the name of it. Is in. Let's see. Yeah, maybe it's right. I'm looking at the cover because I know the cover, and it's not here, which is a shame.
It's the downside of being a bookworm, I know, because they all run together.
Yeah, it's really true, and I think let me just trying to. I'll tell you another great book to read when you want to understand the way the world truly works is a book by Fritz Stern called Gold and Iron, and it's about Bismarck and the creation of the modern Germany and his banker. It's a fun. All right, I'm going to go with the pity of war because it must be what it is, because otherwise it would be popping up, and it's not. It has to be the pity of war.
So I think I can say that we have a nice early autumn book fest lineup with our previously aforementioned The Guns of August, And then we got Margaret Macmillan's Paris 1919.
Which is Margaret Macmillan's Paris 1919 may be the best of them all.
Okay. And then Niall Ferguson's The Pity of War and Fritz Stern's Gold and Iron. Gold and Iron.
Fritz Stern, that book was, and one of the smartest people who I have ever met in the foreign exchange world, who became a good friend of mine. One day I walked to his office and there was Gold and Iron on his bookshelf. And I said, Paul, what are you doing? He said, are you kidding? It's one of the most important books I ever read to understand how all this works. So I knew I was good. I said, he said, it doesn't surprise me that you had read it. I said, I'm really impressed that you read this. He says, what, are you kidding? He says, these are the types of things where you, again, where do you develop an edge? By building up your knowledge base to be able to discern. You know, that's what I always say. Why do you accumulate knowledge? Because you want to be able to discern when people are being dishonest, or you want to question what the real underlying narrative is, and you want to get at it because you want to be able to take it apart. It's like listening for the last few days with all these people who they drag out to speak on the issues that we're talking about. And so many of them are it's just not worth anything, and worth, because if you follow them, you'll go down a road that's only going to get you into trouble. And I always want to know enough just to stay out of trouble.
So, Ira, you haven't heard back from Peter Bookvar yet, have you?
No, I'm going to check my email right now. Nope.
No?
Nope, I have not.
Writing.
He's
machine.
he's really good because he's so low key, and I've only come friendly with him over the last couple of years. He lives in New York. I've met with him a few times. His demeanor allows him to be good because he knows how to listen, and he's not out there yelling. I mean, when he's on with Santelli, that's the way he is. He's just so measured, and he thinks. He really thinks things through. And I know he's managing some money, which is when I really respect him, because I was doing a podcast with him once, and I've never met him, and we're just, and then at the end of it, I said, you make some points. I always think of you as an analyst, but that's a trader's mentality. And this is when he was still working with Larry Lindsay. And he says, well, I'm doing some portfolio managing too. I said, okay, that explains a lot. So my respect for him jumped enormously, because a lot of people who venture up opinions, based on good analysis, it's still, until you've been in the battle. And Brian, I don't mean to diminish this whatsoever, but until you've been and scarred, you can't really understand what it's all about. Everybody has opinions, but it's like, people who paper trade and go, wow, this is pretty easy. I go, yeah, good luck to you. I said, I don't want to ever hear that, but paper trading, of course, is easy. Now have your money on the line and bleeding, and tell me what you think now.
Yeah, and you have your hand on the mouse and your hand is shaking.
Yeah, no, that's right. That's right. Or when I used to not laugh, but I'd watch people on the floor who you knew were stuck in a bad position, and I don't care whether you're a Muslim, a Christian, a Jew, and you stand there shaking because you're in a prayer mode and you're praying. You could see them. They'd go, oh, please, you could see them, oh, please, God, let me out of this. If I can break even, I'll never do this again. And you'd watch them. They would, and you go, oh, this is not good. Because first of all, as I would say to people, that's why you have to learn how to take your losses quickly, because you're not here to break even. If you're here to break even, you have no chance. Even is not a concept.
Very true, Ira.
And you know what I'm talking about, Judd.
Oh,
you
yeah.
would see them shaking back and forth. I go, and it took me a while. I go, wow,
Right.
you could see.
And they'd be pulling out their tucks out of their pockets.
Yeah, you're right. You're right. Right.
Ira, the other one that could really get to the heart of the excess reserve question would be Chris Whalen.
Yes, you're right. But it'll take me a while. He doesn't answer me back if I send him an email. He's very gracious. And him I've never met in my life, but I've talked with him. I took him out.
It wouldn't surprise me if he writes something about it tonight.
Oh, yeah. I hope he would, because I'll get it and I'll send it out when, because, I mean, and he knows he likes that his stuff gets dispensed because it elevates his stature. He told me that. So I said, I've sent this out. He goes, yeah, it's not a problem. It's not, otherwise, you wouldn't be getting it because I don't pay him for it. It comes free. So
yeah.
He says,
I mean, because when I heard this, when they said it, what went through my head was, okay, they want to force the banks to push the filthy lucre out the door. And get
wait,
the banks.
say that again. I missed it.
Filthy lucre.
Yeah.
Just talking about money. But when I heard about the excess reserve reduction, I thought to myself, okay, maybe this is the Fed, trying to press the banks to lend more. But I don't see it. And then the Fed better go tell the regulators that they need to buzz off so that the banks can lend more. Somebody I know with pristine credit and plenty of cash is being put through the ringer with regard to getting a mortgage.
I understand my daughter and son-in-law have gone through this too, and the problem of it is, if they do that, and they got a problem right now because Paul Volcker's already pushing back, because he wrote a piece or sent out something to somebody I saw with the regs that they were just pushing back. They have to be very careful here, and I'm not sure that they want to. Some of these regs they ought not to be pushing back on, to tell you the truth, but it plays right into Elizabeth Warren's hands, and the more they do this, it's just no time for it because she's rising anyway, and she will make noise about it. And that's why I think that I don't know what Mnuchin and company are thinking about with the Freddie Mac and Fannie Mae stance. I think it's a gigantic mistake, and I'm not in favor of it, by the way, with what they want to do, because the United States taxpayer took a big hit and took a lot of liability, and the fact that they have to turn that money over to the Treasury, I'm not opposed to that. By the way, there are a lot of guys hoping that they have enough political muscle to push that through, that they can back it off. But I think this is a terrible time to be doing that because, again, another issue made for Elizabeth Warren, and from what I understand, the Trump team, that's the one they're most worried about. So I don't understand it. I think it's ill-advised, ill-timed. It's a bad trade.
Yeah, I don't get it. He can debate with her.
No. Oh, she'll kill him.
Oh yeah.
No, she'll kill him.
Even if they don't like her, she's going to blow him away in the debate. Oh,
she'll kill him. Because hey, she's actually knows how to be a lawyer. I'm always amazed at a lot of these politicians who have spent their lives being lawyers, and they get up there and stand, and they have no ability to think on their feet. But that's not her. She knows how to think on her feet. She's very good at it. I'm always amazed at these lawyers who can't think on their feet. What exactly were you trained to do?
Yeah,
the legal profession is the only profession where you can tell a lady lawyer to see her briefs and not get, slapped.
To see her what?
Oh gosh, Eric.
you can ask it's the only profession where you can ask a lady to see her briefs. That's a joke. Okay.
Oh, that's terrible.
You got to go there.
Okay. And you know what? From my experience, they won't show them to you anyway. From my experiences in a courtroom. Yeah. Oh, yeah, here's a surprise.
Oh, gosh.
Ira, how can insurance companies make money? The insurance ETFs are at all-time highs. I'm asking everyone. No one can give me an answer. I don't understand it.
It's a very good. Well, listen, as long as the bonds keep going up, they'll sell them and roll up to the next one. They really can't. I'd like to see, or they use leverage, and that's the danger in the system, of course.
So but how can they budget 20, 30 years in the future? Because insurance, they have to think long term.
Yeah, it's very hard to it's very hard to tie into what you're you run a lot of duration risk. And that's, it's the same with the pension funds, right?
Yeah, pensions can blow up anytime. Oh,
these pensions are so underfunded, and I'm not just talking about the public sector, the private sector too, because they can't go to the stock market because they can do X amount, but there's only so much investment they can do in the stock market. So with bond rates so low, it's a big hit. Think about Europe. And Europe has huge insurance companies and and pensions, and so many of them have to be just massively underfunded. Somebody is going to bear the burden. I just don't know who, and I don't know when. But we know that public pensions are way underfunded. It's been a problem for a while, and it's not getting better with
Chicago's a perfect example.
I'm sorry.
But you guys still live in Chicago, so it's not that bad. If it was really bad, you guys would be leaving.
Yeah, but they're leaving. Oh, no. I'm a taxpayer in Arizona.
Oh.
This is my 5 months a year residence now. And it's not for tax because Arizona doesn't. It's not like there is a state income tax, but at least they have some sensibility. Illinois has no sense. There's no sensibility. They're just, I don't know what they're waiting for. And when I have a lot of nieces and nephews who are involved in the education system, I've been trying to explain to them for 20 years. What do you think is going to happen? They just, their answer is just, raise taxes. You'll figure it out.
Ira, speaking to Eric's question about insurance companies and then your comments about pension funds. I don't know if you or anyone in your family is a part of a defined benefit pension plan, but every year you get what's called, well, then you probably wouldn't see these. I get them for clients. There's something called the annual funding notice, right? And there's always a 3-year table, 2016, 17, and 18. And there's always 2 columns whereby they can show what the target funding percentage is with the new massaged adjusted rates and without the adjusted rates. Now, this is L'Oreal, okay? L'Oreal Paris. Yeah. So for 2018, with the rate adjustment, the plan is let's call it 81% funded. Okay.
Okay.
Without the adjustment, the plan is 66% funded.
But what's the adjustment based on?
It's where I guess under ERISA or whatever the hell, under these different acts, they keep allowing them to use lower and lower interest rates to calculate the shortfall, okay, or higher rates to be able to overstate the shortfall. But either way, this has been going on for years. And
yes, of course.
And so what's happening is like on a real world basis, these plans are massively underfunded. But what they have to report to the plan holders is a higher number, making it look better than what it is, because they're allowed to use these adjusted interest rates to make the funding shortfall not look as bad. So what the document is called is an annual funding notice. Every defined benefit pension plan sends one to the plan participant on an annual basis. And this is where you see this shit, but there's nothing you can do about it. If you're a participant, there's not a damn thing you can do about it. My clients send them to me, and I'm like, okay, look, you know, there's a shortfall. Just keep your fingers crossed that you know, you die before the plan goes bust.
Well, that's everybody's. You know, it's like if you talk to everybody, don't worry, you'll figure it. That's when they mean you'll figure it out. Which is, hey, yeah, you're going to be left with all these underfunded and unfunded liabilities are massive to the system. You know what? And that's why, you know, the Fed and the whole principle is, you know, we'll do this, and I guess we'll worry about it later, or we'll print so much money debasing the currency. If you want to wipe out debt liability, you know, your liabilities, yes, you know, just inflate the shit out of the currency, and everybody's a winner. You know, MMT. Now they say they're not responsible, and what modern monetary theory is based on, which is the ability that government can print, is that, and you can go look at it from Warren Mosler and what's her name, Stephanie Kelton. The bottom line for them is that the electorate will be responsible enough to elect responsible guardians of the system.
Hey, look, Ira, listen to this shit. Listen to this.
Me laugh.
So here it is. So what happens is prior to 2012, okay? Prior to 2012, pension plans had to use a 2-year average interest rate, okay? So super short. So under these 3 new acts, the Moving Ahead for Progress in the 21st Century Act, the Highway and Transportation Funding Act of 2014, and the Bipartisan Budget Act of 2015. So those acts now allow a pension plan, get ready for this, to use a 25-year average of interest rates, not 2. So what do you suppose that does to the plan funding? Okay?
Yeah.
So
it allows
from a
just what you talked about.
so a 2-year to a 25-year. You know, next it's going to be God knows what, 30 years or some shit. Well, however far back they have to go in order to capture higher interest rates.
Yeah, that's right. And so, you know, so what you see is that adjustment it's real, and somebody's going to be left holding the bag. I mean, that's what happens. You know, anytime you enter into the realm, and this is the realm you exist in, of financial repression, somebody is left holding the bag. Because when you squeeze somebody else is benefiting. You know, it's like when you crush interest rates down to these levels in Europe, and you're bailing out creditors, you're bailing out debtors. That's the same with inflation. Because bottom line is, why do they want inflation? Because there's so much debt on the book that eases the pressure. Because if you didn't have it and prices weren't rising, the impact of debt on the entire financial system and economy would be far greater. You always expect to pay back with a cheaper currency.
I've thought about that a lot over the last couple of years, right?
Yep.
And the brick wall that I keep coming against is, if they would stop borrowing money, then okay, we can inflate away the debt at some point. But the problem is, that's not what they're doing. They keep layering on more and more debt, so the frickin' thing never is going to get inflated away.
Well, I'm talking about just, you know, private citizens too. They operate under the same theory. You know, hey, I may as well borrow. I can have everything today because I'm going to pay it back with cheaper dollars, except when it doesn't happen, and then you go, and that's Japan, and you can't crawl your way out. But they at least had a homogenous society where they were able to absorb it far better than the United States can absorb it. Can you imagine that we would have been like Japan? Things would have really blown up here. We never would have been able to do it. And so when all these people come out and start making the comparisons to Japan, I go, no, I'm not buying it.
They're rich.
Well, they had a massive pool of savings to fall back on, And they didn't go into it with a lot of debt, by the way. Yeah, there were certain businesses and companies that did, but the average Japanese, credit cards are just coming on to be significant there. They're still a very heavily cash society, Japan. I've been to Japan. It's one of the few places where they don't ask you for your credit card. You're pulling out 10,000 yen notes. They're very happy. And everybody can provide change for them, unlike here.
Well, and I know with being a public employee and on a public retirement system, I know with CAPERS here in Kansas, the legislature has, and through the governor's budgets, have continually rated the fund balance and swept it. Brownback was sweeping an average of $41 to $46 million a year and not putting it. They ended up taking, during Brownback's tenure, they ended up sweeping $436 million out of the fund balance of the pension fund to cover the general fund shortfall.
Yeah, as he was cutting taxes. Yeah, it's one of the things that I like about Kansas, because at least they held them accountable.
Yeah, and we have a balanced budget requirement, and from local governments all the way across. But I think we're finally, after that damage, we should be 80% funded, which we were 83%, I think it was, before the raids or the sweepings. And it'll be with a linear extrapolation, so take that for what it's worth. But we should be 80% funded again by 2035. So it's crazy.
Yeah, and they're a responsible state. Trust me, Illinois is in terrible shape. And if I was Illinois, I'd go, but of course they can't, according by their constitution, which tells you how corrupt it is, because they put it in the constitution that a bankruptcy does not allow you to get out from under your pension obligations. That's that's in the Illinois Constitution, by the way. So they knew where they were going, and that's what protects it. But hell, they'd be better off declaring bankruptcy and get out in front of everybody, because they're not the only ones in this situation. And the sad part about life is you'd rather be the first than the second, because when you're the second, they're going to look, we don't have any more money. You want to see what's in the pension guarantee? Not nearly enough. It's so under, the pension guarantee itself is way underfunded. So if I was the Illinois governor, I'd push every button I could to declare bankruptcy so that I could restructure everything. Because if you can't restructure, all you're going to do is bleed people who can escape. As I try to explain to people, I said, I'm rich. I can move. You know what? Who do you think is going to be stuck here paying the bills?
Yeah. And I know Kansas, the new governor, she wanted to re-amortize, essentially what Angela was saying was roll more debt on. And unfortunately, the CAPERS board and the legislature was like, no, we have 15 years. We should be able to get it squared away. Why roll it out?
Yeah. Somebody's thinking.
Too bad.
But
forward thinking.
Brian, I got to believe that $450 million was a large percentage of the Kansas pension.
Oh, it was.
I got to believe that was a pretty large number for your state.
It was, yeah, and everyone took notice. That's part of why he's now the Vatican ambassador.
Now, since you're a part of that plan, Brian, do you get some sort of annual funding notice as well, or some public employee version of that?
Yes, we do. Yeah.
Wait, who's the Vatican ambassador? Brownback?
Brownback is, yeah.
Somebody may want to remind him of what happened to the Vatican treasurer when they found him hanging from the bridge by a rope. I don't know if you remember that during the.
Oh yeah.
There was a phenomenal scandal.
Yeah.
With the Vatican Bank.
Yeah.
Wow.
Wow. Yeah,
yeah, what's his name? He was hanging from a bridge.
It's the Italian way, Ira. You used to find the guys from from Parliament were in the alley next to Parliament. They'd kill them and throw them out in the alley.
Well, hey, Pax is going to get upset. Do not talk about that.
He's not well. He's got a one-on-one with somebody. He's unhappy. He's not in.
No, it's what I said. Okay, but that's, and I really, when we come back to what the Fed, I think, and I really think when people saw that was not a unanimous, and again, Esther George from Kansas stood tall. I was always a Tom Honig fan. I thought he did a really good job. I thought not making him head of the FDIC was a big mistake. I was also Sheila Bear. Kansas has produced a lot of really quality people.
Ira, who was the third one? You had Rosengren, Esther George, and who was number three? And
Mr. Buffoon, Bullard, who wanted a 50% cut.
James Wrong Way Bullard?
He wanted 50. He wanted a cut of 50%, of 50 basis points. So
that's right.
That'll tell you all you need to know. That was he just had to get himself out there, so we'll get him on some more talk shows. So they'll say, well, you really think 50? Yeah, this guy has been so far all over the place. It's impossible. I can't take it from him. There was the guy who would come out when the market was breaking. Or before it was breaking, we should raise. Then the market was breaking in that 1 October. I think we need to cut. And it salvaged the market when it was at 2015 or 16. It was under severe pressure. He irritates me because I go, wait a minute. You're supposed to make decisions based on some real economic analysis. But if this is your economic analysis, you change your mind on such a regular basis that it can't be. I don't want you at that bank. You're too capricious in your analysis. It can't be based on anything, of any quality. And yet, the St. Louis Fed has always been one of the better research departments of any Federal Reserve bank. I mean, they've done some great work. In fact, they were the go-to on, when monetary theory dominated, when, the M1s, M2s, M3s, it was all out of St. Louis. It was the St. Louis studies on the velocity of money. But he's ridiculous. I don't know what. I think he's vying for the chairmanship, and I think he thinks that if he keeps talking this way, Trump will. If Trump could get Jay Powell to resign.
Ira, you've said this, and yesterday Danielle DiMartino Booth said it again. She said, "I don't know what it is, but the minute they walk a new person walks into that building, it's like they're struck by lightning as far as the stardom is concerned."
Yeah.
That she said that she's known Judy Shelton for a long time.
Yeah.
And that there was something that what was it that Judy Shelton said, and Danielle basically cringed.
Oh yeah,
it was that they should report to the auspices of the White House.
Oh right,
right.
That's right, Brian.
That's right, Brian. Santelli caught me I saw him in the hallway today when I was leaving to go home to work from home so I can trade here rather than with all the other superfluous noise. So he saw me. He said, "Did you see what she said?" I said, "No. What are you talking about?" So he told me that. I go, it's like, are you? Right? So do they all lose their minds once they can smell? You know what? And I guess somebody made a really good point the other day. When you talk about central bank independence, don't confuse independence with the sense of being accountable. These are two different things. You can be independent and also be held accountable. So don't think that one is devoid of the other. And I thought that was really a good point, because people like to confuse, well, I'm independent, you can't, but who's going to hold you accountable? That doesn't give you a free pass to be unaccountable. And I think that's right. I think that's right.
There's something in the air at the Eccles building.
Yeah, well, it's all about the big payday. It's like, then all of a sudden when you walk out of there, you're a free agent.
Well, the benefits at the Federal Reserve System are pretty damn juicy to begin with. A friend of mine, after he was downsized at Goldman, went to the New York Fed for a little while. Okay,
yeah.
And Ira, he had every other Friday off. There was a defined benefit pension plan and a 401k with an 8% match. Okay? And health insurance that covered like basically everything with virtually no out-of-pocket, and a paycheck that was, reasonable, above average.
There's a reason for that.
And I told him he should have stayed there.
We have a printing press. What's the difference?
Exactly.
Jay Powell told me.
The freaking benefits are juicy, I'll tell you.
Oh, yeah. Yeah. Hey, it's the greatest OPM, other people's money deal than ever.
Man.
Yeah,
all right, guys, I got to jump.
The Bank of Brazil just cut their lending rate to 5.5%, which is unbelievable.
Just now?
5 point. Yep.
Very inflationary.
Yep. All right. I'll join in another day. Thanks for the question.
Okay. See ya.
Discussion.
Thanks, Ira. Have a good night.
Thank you for your time.
No surprise. No real surprises. Okay.
No.
Okay.
See you. All right. Good night, Judd.
Bye.